Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, August 18th, 4:51 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. You can see in the upper right-hand corner of the screen here with the trend gauge, we are flashing bullish/uptrend for leading stocks. For our short-term indicator, which applies to the 5 major indexes, all trending above their 21 EMA. For our 50-day medium-term indicator, all 5 indexes trending above that level. And long-term mixed, we've got 2 indexes above the 200-day, the rest battling to get above. We'll take a look at all the charts momentarily. So what just happened today? Tight consolidation continues. Opened about flat, bottomed within the first hour. Bounce up, a bounce down, a bounce up, just kind of chopping all over the place. But the bottom line is that it was an inside day, which means today's high and today's lows on 4 of the 5 indexes were contained by inside the prior day's highs and lows. So the market, as I have said, can only do 3 things. It can either trend higher, trend lower, or go sideways. Right now we're going sideways, preparing for the next move with this tight action. Tight action only lasts for so long before something's got to give. We don't predict whether it's going to go higher or lower, but consolidations should continue in the direction of the primary trend, which is higher across short and medium term. If it breaks down, then that's a change in character and will take defensive action. So on the day today, G6, our growth proxy, up 0.56%, S&P up 0.2, NASDAQ 100 up 0.2, Dow up a smidge, mid caps up 0.8, Russell 2000 small caps up 0.7. Global diversified 60/40 stock bond basically flat on the day. Good day for us in-house, up 1.05%. Leaders doing their job. And we'll go over those charts momentarily, along with the buys and sells that we did in-house today. So let's take a look at, first of all, one of my best friends, the drawdown chart. This is why we do what we do here at Revere. Last 13 bear markets going back to 1968. You do not want to get caught in one of these with a poor sequence of returns heading into retirement. You can see how long it takes, how difficult it is to climb the hill back up once you have one of these severe bear markets. Severe being a loss of 30% or more, averaging 44.5% over the last 6, which means you need 80% to get back to even. It takes a lot of time to climb that hill back up. The best way is to trend follow, which is what we do, particularly in that trend when we're under this black line, the 200-day moving average. This is where all severe bear markets take place. This is when we get out of the way, when we break under it, proceed with maximal caution while we're trending lower between the short term and the medium term while we're below it. Start putting a couple of toes and then a foot and then a half a leg back into the water when we get back above the short and medium term. And we've ridden this up for a very nice trend till we ran into this brick wall of a 200-day moving average. Now we've pulled back in a constructive manner over the last 2 days. Still holding above the ADMA. This has been a really strong rally. We've participated in it, but we're prepared either way. Always have our stops in place for our holdings. We put a few hedges on. Some of them have lost money. Some of them broke even. The last 2 that we took off, both of them today made a small amount of money, as really I consider today to be a constructive day, a lighter volume inside day. It seems to me, my interpretation is that the market is biding its time for another crack up higher at the 200-day moving average, but that's not a prediction. It could very easily break below this 4250 area and come all the way down here to test the 21-day moving average, which is still 3.2% below where we closed today. So very clearly, there is risk in the market. And if you're interested in a trend following approach like this, reach out to me. Email don@revereasset.com or phone 855-REAL-WEALTH. That's 855-732-5932. So let's dive a little deeper into the charts, get into the tail of the tape. First of all, let's start off with the high level tail of the tape. Headwinds haven't changed. We've been dealing with the same stuff for months. Sentiment, nothing spectacular. Do want to point out though, VIX, all the way since June 24th, it's been trending below the 50-day moving average. This is a benefit to the markets, and you can see that started right here, June 24th, first move off the bottom. The VIX, while we pulled back two more minor legs, the VIX stayed below the 50-day moving average, and now trending below the 50-day while we've been trending higher above the 21, then the 50, and the 8 EMA in the indexes. They are usually inverse correlated, and that's what we're seeing here. Fear and greed still hanging around at neutral, operating under the bull case since 7/27. Some news today, existing home sales for July down 6%. They're down 20% year over year, worst since 2015, excluding COVID. Let's go to the indexes now and take a look at what they're doing. You can see as I bring up a 15-minute chart here of the S&P 500, this tight action inside today. Here was the run up. This is where we ran into the 200-day moving average and had a sharp pullback right off of there. Had a gap down on Wednesday showing some concern, but we held this 4250 area. When you draw the line, you can see 4250 over here, 4250 over here. These charts have memories regardless of what people that say technical analysis is voodoo, or regardless of what they say. So strong finish yesterday. A little bit of a fade into the close, continued right into an unchanged open today, bottomed, as I said, within the first hour, and then an inside day all day today, coiling for the next move. Here's your daily chart here. You can see where we are below the 200-day moving average. Let's go to the NASDAQ 100, a little bit further away from the 200-day moving average, 3.3% above its 21-day moving average, just chilling right here. 2 days closing right on the 8 EMA. The 8 EMA has been containing this run. That's how strong it's been. We haven't even touched the 21 in over 4 weeks. Dow Jones Industrial Average, let's look at the DIA ETF. 3 closes tight, little flag here above the 200-day moving average. Good stuff looking there. And mid caps, strongest of the indexes. 3 days above, a pullback closed right on the 200-day, move up off the 200-day today, and IWM trying to get back above. This is the small caps. 3 closes above, 2 closes below now as it continues to battle between the 8 and the 200-day moving average. Back to the tail of the tape here, some notes. UUP, that's the US dollar at a 3-week high. This is a cautionary tale. Strong dollar is bad for stocks, but we've been rallying regardless of that over the last 7-8 sessions. But definitely something to keep an eye on. That correlation doesn't persist. Dollar higher while indexes are going higher. Definitely we're keeping an eye on that. As I mentioned, 4 out of 5 indexes with an inside day. Mid caps did make a higher high compared to yesterday. Expectation coming into today continues to be bullish to sideways action after the 8-10 breakout. We are consolidating, as I mentioned, from an emotional standpoint, trying to focus on exercising patience with holdings, using hedges for pullbacks when we get extended to try to not get dislodged from some of the good positions that we have, and that really paid off today. Support and resistance areas that we've been watching coming into today on the S&P, another day between support and resistance, actually didn't come anywhere close to touching it with the tight range, less than a 1% range on the S&P today compared to its current ATR, which is about 1.5%. NASDAQ 100, and also a tight day between this lower support and this 330 that we've been battling back and forth. We want to see the NASDAQ get above this 330 area and take a shot at 337 over top. Tight ranges across the board, as I mentioned. Oils led the way today. Solars, CSIQ. Let's take a look at the TAN ETF. This has been a very bullish chart. Pulled back for a few days here, gapped up, pulled back to the lower part of the range. CSIQ, big gap up today on 1,000% volume. That's something you got to pay attention to. As you'll see, I have my alerts set there. I'll update those as I get ready for tomorrow's action. SOX, SOXX, with a nice bounce today after a rough day yesterday, but it did hold the 21 yesterday. Update today. You see this alert that I have set while it's trying to get above this 423 double top-ish consolidation. On the other hand, we don't want to see it break below yesterday's low. Always want to know an upper alert and a lower alert on something that's critical. XME metals also had a good day. Biotech continues to take a rest. Let's look at this. We got stopped out here with a close below the 21. It went on a 4-day tear, consolidating it now, pulling back to the 21-day moving average. It should not go below today's low if it wants to stay as a healthy consolidation. Let's see, biotech, healthcare, and real estate on the weak side today. So changes to the portfolio. Our weakest holding, net, we sold this. 4% loss while the S&P made a 3% gain. That's not the risk reward result that we're looking for. It's set up fine. 300% volume, up 27%, just really couldn't make any progress. And I know it's pulling back on light volume, but at some point when there's stocks that are acting better, you got to thin the herd for the better acting ones. Now, tomorrow this could gap up and bust above this area on massive volume. And if it does, I've got no hesitation on buying it back. But this 80 area, if you look to the left side of the chart here, for now a little bit too much resistance for it to overcome when it ran into it last week and earlier this week. The second thing is we took off the rest of our hedge, small profit on that. On the constructive action, this was really in place. This SSO offset, SDS, was offset to our SSO just in case this big reversal here turned into something extremely sharp to the downside as we were so extended above the 21-day exponential moving average. But anytime I can take a hedge off and still make a little bit of money off it, I'm certainly willing to do so. On the other hand, our SARC, look at ARKK. I talked about how we broke below the 21-day exponential moving average today, but this had its tightest day, less than a half of an ATR, less than 3% today. Very tight for this. Again, it's coiling. I don't want to wake up and see this up 3 or 4%. I had a small gain. I took the gain. Considering that the other 5 of the 6 ETFs were up nicely today and the G6 was up 0.56%, really led the way versus the other indexes. I never want to overstay my welcome on the short side. So how about some buys that we did today? Gapped up, BJ's, crushed earnings, big gap up, sold off during the day after a big, this is why you really want to wait. Never buy a gap right at the open, even if it takes off to the upside, because look at this, high of 77, and then 5 minutes later, it's down to 72. So we waited for this to play out, a little bit of a bottom to be put in here, and then we took a shot around 75. A little bit of a gain. Now it's really just consolidating. We're down $1 on this, but easy stop, shouldn't break below today's low. So down 1% on this, but we're up very nicely on the other one, the other strong gap today. Actually, there were 3 strong gaps today. Wolf was the big one. 876% above average volume, up 32% on the day. Silicon carbide, you're going to start hearing a whole lot about that. It's a much more energy efficient way to convert solar into usable energy. A lot of companies are making a lot of money on this conversion to this not brand new technology, but it's starting to become mainstream. And that was what led their earnings report for Wolf. This is the former Cree company, changed their name to Wolf. So we bought 2% at 107, another 2% at 110, closed at 113. Great action on that big volume. This is how the gaps up. This is how you want them to act. Let's look at an intraday on this. You got your 5-minute. Here's your quick move up. Don't buy right away. There's always going to be a pullback, but the pullback held the low. Once I saw that hold the low, I'm like, okay, my risk is greatly reduced from buying up here near 113 to down here with the stop below 103. So the first shot in here was taken at about 107. We got to 110. We took another shot, I think it was in here. So 4% position in Wolf. We bought BJ's. We added to 2 positions that we held. Enphase, a little bit of a disappointment on this one. Enphase gapped up this morning on big volume along with CSIQ above this 300 area. It looked like it just wanted to take off to the upside. Just not quite ready yet. You can see the big volume early, but then it pulled back, actually closed near the lows of the day. Still a constructive pattern. But we're underwater, and this buy is still profitable on the other buy. No big deal as long as it holds yesterday's lows, which appeared to look like a shakeout and then a follow through this morning. But some sellers did appear for this. Maybe they were all pouring their money into CSIQ today. And the other buy that we did, a pyramid buy, Shockwave taking it. We took it from a 2 to a 3 and now to a 4% position, one of the absolute strongest stocks in the market. We bought our first position somewhere in here, bought the pullback, added a little bit on strength, added today as it held the ADMA on this pullback. So we're up to a 4% size on Shockwave. So did I cover everything? Sold our weakest position net. Added to Enphase, added to Shockwave, bought 2% BJ's, 2 plus 2% on Wolf, got rid of all our hedges. This takes our adjusted beta from 0.83 to 1.4. We've got no hedges on, 11 positions plus SSO, stops in place. If the market, this consolidation fails, we're ready to either put more hedges on or pull the trigger. Let's take a look at the rest of the support and resistance area. This is really where we're battling. 4 days here around this 4,300 area, plus or minus 25 points on all of the closes. And below this is this retrace of the decline, this 50% retrace level that we broke above on 812, holding it. It's a big area. Any pullback should hold that. Otherwise, we're getting into the declining 150-day moving average. We'll be getting more defensive if that happens. Any other key charts that I want to show today? How about some other positions that we own that had a good day? LNG, this is what leaders do. Up on volume, nat gas just is in a sweet spot now. Relative strength line at a new high. ON, got a 4 position. Nobody wanted this last Tuesday when it was selling off on volume all the way down from 69 all the way down to 61 and changed. Undercut, closed above the 21-day exponential moving average. Nice move up 2 days on the pullback on lower volume the last 2 days after it made an attempt at a breakout from this flat base, but breakout accomplished today, 90% above average volume. 7.25% up today. GFS, we own this. Semiconductors, as I said, had a great day today. All of these in one way or another are somehow connected to the silicon carbide technology that's becoming mainstream and saving a lot of money for the conversion to solar. You need breakthroughs like this in order to make the transition succeed, but the fact that oil won't give up tells us that we're not quite ready for that to take place yet. And if you look at the energy bills in Europe, that's just confirming it. They're getting coal plants and nuclear plants that were planned to either be mothballed or were in mothballs. They're waking them back up to try to cut their energy bills as Russia is playing hardball with nat gas to Europe. But you can see here XLE, its demise has been greatly exaggerated as long as it stays above the 21 here. Oil acting okay. Any other charts we want to take a look out here? I don't think so. I think we're good. Did I bring up Shockwave that we added to? Let's show this. Shockwave, yes, I did. 2-day pullback and then the nice bounce today. That's going to wrap it. As always, love to hear from you. Email me, don@revereasset.com, or the phone is 855-REAL-WEALTH. That's 855-732-5932. Love to talk to you about becoming a client. Go into more details if you have questions on our approach. So wrapping up Thursday, 8/18. This is Don Vandenbord with Just the Facts. Don't forget that drawdown chart ever. And that's why we do what we do, participate in uptrends, pull back a little bit during consolidations, get the heck out of the way with downtrends, especially under the 200-day moving average. Thanks for listening and have a great day.